We know Fridays are always tricky, especially with stocks like AMC who are really highly volatile, okay? We expected the shorts not to not to fold that easily, okay? This is war. This is a real thing happening, and this is not for the weak, guys. So this is expected, okay? But I have something really interesting that I need to share with you guys. It's from the high importance, and it will give you a clue about what is actually happening and where we are heading to when it comes to next week. But before we get into that, guys, today we know the SSR rule was in effect because yesterday we were down 20%, so more than 10%. Now, because of SSR rule is in place, the shorts are not allowed to short the share price when it goes down, okay? They are only allowed to short it when it goes up. Look, we opened around $48, okay? Went all the way up to 53, boom, they short it down. Went back up to 55, short it down. Anytime we will try to go back up, they'll put it down. Anytime they'll try to go up, they will put it down, okay? And with all the options closing on Fridays as well, I mean, we had a bunch of contracts at that 50 price target, and a lot of them, the market makers really needed to make sure they push the price down, so down that they wouldn't have to honor those contracts, okay? And you combine those two, it explains the price that we had today. Now, when you look at the data from Ortex, it gives you the impression that the shares continue to be returned today with a net 28.4 million shares returned so far. But most of these are likely to have been bought 2 days ago because of the T+2 settlement, because, 2 days ago we had this huge uptick, okay? High $60 and $70 a share. That's where we had, those shares being returned, okay? Nothing to do with the price action that we had today. But guys, it gives you the impression that the shorts are covering, but in reality, they are not. Because if they were covering, the volume wouldn't have been so low and the share price wouldn't have been closed on the red. It would have been the total opposite. Now, when you get into this interesting post in Reddit, okay, from a fellow ape, short interest dropped 7% via Ortex. Evidence pointing to shorts did not cover, pretended they did via options to break the squeeze, okay? So the data points strongly to hedge funds using tricks to appear as if they covered the shorts when they haven't truly covered, okay? You can read the full version here, but I'm gonna try to highlight the main points here. First of all, this is a way from the shorts by giving the retail investors not holding the line and panic selling, thereby driving the price down further and releasing into the market more of the float and enabling the shorts to cover / buy back shares at progressively lower levels that happened today. But here's where it gets more interesting, guys. This is something that really happened with GameStop as well. When GameStop was really trying to get to the real short squeeze happening and starting, the same tactic, the same tricks were used that we've seen today with AMC. However, the other scenario where this can occur is the hedge fund short in an interest in GameStop didn't really dissipate, but instead they played a trick to make it seem like it did, because the short interest is down and you will think maybe they're covering. No, they are not. Demoralizing the retail side and further breaking the squeeze, because if people are panic selling and people are not that confident, and that's what is happening now. Some of the new apes are thinking this is a dead cat, okay? And they were like, man, I bought at 60, it's down $47, let me just get out here, okay? Now, this is another thing. If the short selling are facing a squeeze because the shares are hard to buy, or scrutiny for holding an illegal short position, which we know they are, they can create an appearance of having closed the short positions through the use of deceptive options trades. Okay, guys, it gets a little bit complicated, I know, but in simple language, the shorts are using a trick that we already know they used back in the GameStop short squeeze in order to feel like they are returning and covering those positions, but in reality, they are not, okay? And we already know that things are not getting in their favor with the brokers they're working with, okay? For example, this is the new margin requirements from Schwab. Now, on AMC Stock and GameStop, you cannot, selling short put options is permitted if you have available funds to cover the entire amount of exercise. Selling naked calls is prohibited, all right? It means You cannot short sell if you don't have the money to cover, which we know is not the case for the hedges because they are so extended on the margin calls that the brokers, like Schwab and Jeffries and Raymond James and others will follow, pretty much telling them, hey guys, you cannot short sell AMC, GameStop, and Microvision anymore because I don't want to go down with you guys. Okay, so guys, just to put things in perspective, this was not even the beginning of a squeeze. Okay, so these tactics, they are really trying to scare as much people as they can, as they want, okay, before the actual thing happens. But if we continue to buy, if we don't fall into these tricks and traps, and we continue to hold and do our part as apes, guys, I guarantee you this is gonna fly to to levels that you can't even start to imagine. Okay, so nothing has changed. They have not covered, which we know is the main key here for this squeeze to happen, and we all get about 10 days. So again guys, we continue to hold tight.